All right, here we go. Stocks by the numbers. Welcome back. Micron Technology, ticker symbol MU, listed here on the NASDAQ. This is a company that obviously has been doing very, very well. Here we go back to the tail end of 23. Stock was about mid 60s, high 60s. All of a sudden, recently, stock's up to 160. So taking a hit today down to sub 134 and a half, down about 8 points, 5.5% here on the day. Numbers just came out. Estimates on the EPS side, 48 cents a share. The company posted 62 cents a share, beating by almost 30%. On the revenue side, 6.811 billion on estimates of 6.669 billion. So very nice beat on the top and bottom line for Micron. Stock takes a 5.5% hit. Why? Basically because they mentioned that they're going to increase capital expenditures moving forward. I believe it was about 30% of revenue that they're expecting. I could try to pull up the article, but in my opinion, like I always used to say, unless a stock is massively overvalued in the numbers, then in my opinion, if they come out, they beat earnings and they drop as opposed to pop, then sometimes we could view that as a very nice opportunity as opposed to some negativity. And while they're dropping the stock, we can see that a lot of institutions are basically still bullish on the company, right? So the stock's down here at 134 and change. We can see UBS adjust price target to 153 from 155. Not a big change, maintains buy rating. And there were other institutions like UBS as well. We'll get to it in a second. In line. Wasn't enough to satisfy investors. Despite results from most quarter came in better than expected, showcase how the company is seeing AI demand energize its business. Despite the sell-offs, bulls saw a reason to cheer as they examined how high bandwidth memory, a technology that's proving important for AI, is manifesting in Micron's results, right? So we went from basically having no sales here, as they say, to potentially billions of dollars in sales for this high bandwidth memory. HBM will continue to be sold out through next year, with the company expecting billions of dollars in sales from the reported $100 million in the May quarter. That was a Rosenblatt analyst. Quote, management continues to see over 20% bit share in HBM by 2026, which is remarkable considering it was essentially zero last year. So we went from zero to about 20% share. Pretty impressive in my opinion. Remains encouraged by HBM's potential to reverberate across the broader memory landscape as, quote, the more HBM wafers started, the fewer bits of DRAM are made for other variables. That's notable because it could further supply constraints, which in turn helps pricing. He rates Micron shares a buy with a 225 target price. Needham analyst, quote, longer term, we were interested to hear HBM4 allows for the customization of base logic die. This would essentially lock customers into that custom supply and is an aggressive counter against the memory is a commodity bear case. Has a buy rating on Micron, boosted his price target to 150 from 120 after the report. We'll have to wait for 2025 for a bigger AI payoff. Well, we saw the drop in revenue that Micron had from 22 to 23. Now they're expecting a rebound here for 24, and next year, 25, looks to be potentially their biggest year. So this is why, again, this is a similar situation that I think falls into the category, in my opinion, of dealing with the short-term volatility to look for that long-term growth, because the stock has done phenomenally well over the years. It can't be denied. Citi analyst, Micron's outlook looks conservative, reiterated his own bullish view on the stock, which includes a buy rating, $175 price target. He thinks there are multiple reasons why Micron could see its gross margins expand during each quarter of next calendar year. The improving mix includes ramp of HBM to several billion in sales, noting that Micron anticipating strong demand for high-margin dynamic random access memory products in the server market, solid-state drives for the data center. Quote, Micron is also expecting continued supply tightness into 25 due to limited production growth and wafer loss from HBM. Micron's forecast, quote, didn't quite meet our more lofty expectations. Part of our positive thesis around memory is our belief that the industry is being very cautious around bringing new capacity online. Micron's guidance and CapEx outlook very much fit this thesis. has an outperform rating along with a $170 price target. So this is what I mean. For the most part, everyone is still bullish. And again, these price target maintains or potential upgrades came after these numbers were reported, right? Keep that in mind. Okay, yep, we beat EPS. Analysts reiterated buy rating, price target 170, implying 19% upside. Sees the company as a, quote, key AI beneficiary in both data center and edge. Recognizes Micron as, quote, last remaining pure play US-based memory company. And sees it benefiting from trends in data centers, cloud computing, and 5G. Also, we have things like the CHIPS Act, and we know that someone like Donald Trump basically talks about how strong we can make America again and try to better our businesses and try to better our economy again. And 4 years ago, well, more than 4 years ago, obviously, when we were under the Trump administration, we did see good moves in American tech companies, even like Intel. I remember Trump came in, right? Intel announced, oh, we're going to spend a couple of billion. We're going to build a facility in the U.S. So we could potentially have that second wave now over the next 4 years of that kind of reinvestment and that rebuilding of American manufacturing, American technology, American facilities, American factories, right? So something like this, if this is, quote, a pure play US-based memory company, as this analyst suggests, then it could very well see some tremendous growth over the next 2, 3, 4 years if we do have another Trump administration, in my opinion. As memory pricing improves, sees Micron emerging from the memory cycle trough and foresees potential share gains in high bandwidth memory. Overweight rating raises price target from 150 to 160. Applauded Micron's, quote, recent efforts to close the tech gap with Samsung. He also noted that Micron's expanding its presence in data centers, flash-based products. Leading to higher growth and profits. Sees long-term memory trends of increased DRAM and NAND adoption, benefiting Micron. Okay. Rates Micron stock as overweight with a price target 150 a share. Kumar remains positive on Micron following the report. Sees end markets improving with increasing demand and tight supply expected to persist through most of 2025. Noted that data center memory demand has surged with revenues nearly doubling year over year. Quote, we view the business conditions for MU as extremely favorable. JP Morgan raised price target to 180. Another analyst reiterated overweight rating, price target 180. Micron is poised to benefit from circular trends in mobile DRAM, reducing volatility in commodity DRAM. Yep. Another analyst has buy rating on Micron stock, 12-month price target 158, implying a 21% upside. Sees, quote, AI demand growth and disciplined supply driving, quote, above consensus earnings power in 25. Harry, my apologies, sees the recent stock pullback as an opportunity to increase positions. So in my opinion, we can potentially continue to keep dropping. If we look at some of the technicals, we might see like the low 120s. But overall, in my opinion, for the longer term, over the past several years, MU has been a phenomenal performer. And again, I think that with all of this input coming in about the increasing AI demand and the necessity of it and the potential tightening supply, mixed with the actual numbers and revenue that Micron's been bringing in my opinion, I personally like it for the longer term. And I think we're basically approaching kind of what could be viewed as like fair value for this stock, which is why I feel that we could potentially see a bottom soon, and then we can rebound to kind of where we were and potentially even higher. But basically, as you see here, for the most part, everyone's just talking about demand increasing. Micron plans increase capital expenditures for 25, with indications suggesting 26 will also see growth. See, a lot of these analysts basically still maintaining their buys, their outperforms, their higher price target, maintained by UBS. Again, from 155 to 153, but that's still what, about 10% higher than where we are right now. Here they talk about the capital expenditures. To nudge up its capital expenditure forecast to $8 billion for the fiscal year ending in August. It also said it will raise this spending materially for the coming year to around the mid 30% range of revenue. Now we know, right, sometimes you get out what you put in, and sometimes these companies have to reinvest into R&D or whatever the heck is going on, and that will potentially further increase revenue and sales a year or two down the road. So in the short term, it's usually a negative, and they'll beat up the stock. You'll have a couple people come out and say, oh, this is more than we thought. I don't know. It's going to take a while for this to rebound. And then 6, 8, 10 months from now, when the stock's hitting probably new highs, in my opinion, then they're going to talk about how, oh, they made the right move, they reinvested, and now it's paying off, and blah, blah, blah. Based on Wall Street's consensus revenue forecast, that suggests Micron will spend about $13 billion more than it has ever spent on CapEx, and 36% above the annual average of the past 5 years. That's also substantially above the $10.8 billion analysts had projected. That plus inline revenue forecast for the current quarter through a little cold water. Wall Street still isn't that worried. 89% of analysts rate Micron a buy compared to 63% a year ago when the company was still deep in a memory downturn. UBS also noted much of Micron's planned CapEx will go to use it or lose it projects backed by the U.S. CHIPS Act to build new domestic production facilities. That won't result in a near-term surge in memory supply that could drive down prices. With other memory markets beyond AI still struggling, Micron has to be careful where it places its chips. I don't know. In my opinion, it all sounds good to me. And if this is truly, as that one analyst said, quote unquote, like one of the Lone Star kind of last stand solely based U.S. plays, then that's why I'm saying even further down, even further down the road, roughly 4 months from now, if we do happen to have Trump win the election and come back into the White House, I think it's just going to further fuel and add to the momentum of MU's growth here. But yeah, it was basically the increase in capital expenditures, in my opinion, which is the main reason why they're kind of beating the stock up here in the short term, in the moment. But as you see, for the most part, a lot of people are, B of A reiterated buy rating, 170 price target, is what I mean. For the most part, again, 89% of analysts are now bullish on it, raising their price targets, right? So that's 9 out of 10 analysts, right? We get 10 analysts, 9 of them are saying now it's a buy, it should go higher. Yep, we keep seeing lofty expectations. But overall, in my opinion, I like it. And again, it's been growing very nicely. And now if we just look at the chart real quick, I'll get to some numbers in a second. But if we look at the chart real quick, we can see that if we draw out this trend line here going from the bottom, February 20th, 24, and you can see coming up to that recent drop back down on May 31st, 24, you can see that we bounced around that trend line here today, and we're currently sitting right below it. So if we do happen to break this trend line and continue the sell-off, I think we may potentially double bottom right here around this fib level, looking like about $121, which is why I'm saying a pullback to the low 120s could potentially be incoming. This other trend line goes back here from this low of October 26, 23, connecting to where that previous trend line started on February 20th, 24, cutting across. And you can see that worst case scenario, we could potentially see a pullback, maybe even a gap fill right there, 102.25, or potentially a pullback here to about maybe 105 and change. But again, either way, I mean, if we begin building a position in the 130s, the 120s, and then we turn around in a month or two and we're down to 107, like we always say, if we liked it at 125, 130, we should love it at 107. $148.5 billion market cap. We're getting a small dividend here yielding about 1/3%. We can see that the EPS completely turned around from bigly negative to positive here, even after they were expecting a negative EPS back in Q2. And now Q3, they come out and they beat again by 29%. So the profitability side is completely turned around. You can see the revenue was kind of plateauing and slowly growing, and now recently just started to chunk up here from $4 billion to the high $4 billions to $5.8 billion, essentially $1 billion quarter over quarter. And now these recent numbers came out $6.8 billion. So another billion plus quarter over quarter. So we went from 4.7 to 5.8 to 6.8 billion. So when people look at this growth here up to the 30 billion and then they see the drop down to about half that, they're like, what the heck is going on? The company's struggling. And then what happened the second half of 23 going into 24? The revenue started to come in again. The margins got adjusted. And of course, the business is growing based on the reinvestments that they made throughout that 23 year that everyone was beating them up for, right? Now the cream is rising to the top. But also, more importantly, if we look at the forecast here, we can see that, again, the second half of 23 rolling into 24, the company has been very solid on the revenue side and on the EPS side, same exact time frame. But also moving forward, look at these numbers now that we're forecasting, expecting basically another billion growth in revenue here next quarter, 7.6 billion. And then another billion growth roughly up to 8.6 and then 9.3 and then 10.1, all this happening within the next 4 quarters. And if we expand here annually, we can see 24 basically a bounce back year going back to 25 billion, and then 25 forecasting above 38 billion, which as we see would be the most on record so far. So the growth is basically that, they're forecasting that this big growth and this big demand is going to continue to come in throughout 25 and 26. That's why I'm saying, if they're forecasting this growth, if the demand is there, if they just took a big market share, and of course, if they're a US-based business here, and one of the few ones left, then I think, in my opinion, I think the demand will be there. I think the continued business will be there. And that's why I think, personally, MU really shouldn't be an issue here. And even if we look at longer term, we can see certain things, right? Like the debt this time last year, about 13 billion. Now we're up to 14.3 billion. The cash, they used to have almost 10 billion on hand. Now we're down to about 7 billion. So I understand that there are a couple of negatives, but in my opinion, I just think the positives outweigh the negatives. And look at something like the free cash flow. It was almost minus 1.9 billion this time last year. Now it's minus 165 million. So this is why sometimes we have to go through a quarter or two, a year or two of this restructuring to benefit even greater 1, 2, 3 years down the road. And I think Micron is starting to prove it to us here in the numbers anyway. And we have assets outweighing liabilities, which of course is a very good thing. The book value per share is technically down and is now sub 40. It was up to above 45, so I can appreciate the fact that, again, we do have some potential kind of little red flags. But overall, in my opinion, the growth of the business does seem pretty impressive. And assets minus total liabilities yields total equity, right? So we're at about 44 billion. Debt, 14 billion. 44 minus 14 gives us about 30 billion, right? But we're forecasting about 25 billion for this year. So if we add 30 and 25, that gives us 55 billion, which is essentially right around our book value there of about 40. And you can see that we're trading a little less than 3 times, quote unquote, real fair value, in my opinion. Which, especially for a tech company, US-based, that just did a lot of reinvesting, just got some potential funding from the CHIPS Act, and is now forecasting bigger and better things over the next year or two, in my opinion, I think about 2.7 to 3 times that quote-unquote fair value number, in my opinion, is undervalued for a tech company specifically. But, of course, some of these numbers aren't the best they've been, but they are rebounding. If we look at something like the price to sales ratio, we can see 8.6. That's the highest it's been the last several quarters. But again, in my opinion, not necessarily something that really is heavily weighted here. And as we see, even something like the price to cash flow exploded from single digits to double digits up to almost 50 times cash flow. But the stock was, for the most part, continuing to climb up. Now we're almost 55 times cash flow. But we looked at the improvement that the free cash flow had over the last several quarters, right? Price to book now is up to above 3.5 times book. That's the highest it's been going back the last several quarters, which is why I'm saying in the immediate short term, we can potentially continue to sell off maybe another 10% or so. But overall, in my opinion, I do think we continue to climb. Enterprise value is actually above the current market cap. Again, enterprise value, basically what another company would pay to buy out this stock, you can see is roughly 10% higher than the current market cap. Our return percentages, for the most part, are negative, but they are trending upward here in the right direction. Same thing with our gross margin, right? We were positive double digits, and then we dropped big negative here, 30%, and we climbed all the way out to positivity and almost back up to that 20% mark. Not too shabby, in my opinion. Operating margin percentage slightly negative here, 0.5%, but we can see we were minus 40, minus 60, and the fact that we went from decently positive all the way down to big negative and have now completely turned it around and are almost basically back at flat, in my opinion, that is pretty impressive. You have to give credit where credit's due, right? That's the point I'm trying to make. In my opinion, this is not just a completely negative situation to where this stock really should get beaten up too much, in my opinion, which is why you're probably just seeing like a 5-6% drop as opposed to a 10, 12, 15% sell-off. EBITDA is up basically 100% here quarter over quarter, not the highest it's been, but again, we took some big hits here in a lot of these metrics, and now we're kind of climbing out of the gutter. Net margin percentage, again, down to minus 60, minus 50%, slowly clawing back, and now boom, positive 13.6% for last quarter. Inventory turnover, essentially flat. Asset turnover is down from where it was, but slowly climbing back. Our debt ratios are up, which I understand could be viewed as a negative. But again, if this company is forecasting this type of growth in revenue moving forward and this type of steady increasing demand from the AI sector, then in my opinion, I still see big growth here. I still see big growth here. Not only in the numbers, but of course, again, in the technicals as well. And if we do pull back to about that 120 range, I do expect a bounce back to basically where we are here of the mid-130s. If we switch over here to stock charts, we can see the RSI now basically middle of the road, sitting at about 49. We could see mid-Bollinger Band 136.88, stock hit 137.39 and then rejected. So we may potentially reject and stay down below this mid-Bollinger Band and try to retest this 50-day moving average of about 126.5. That would be the first time since looks like the end of May. And for the most part, the stock has been above the 50-day moving average since about the second half of February. So it has been pretty steady. And that's why I think, in my opinion, if we dip down below the 50-day and we touch these low 120s again, you can see bottom Bollinger Band, 121.89. I think, in my opinion, as soon as we approach or potentially break this 50-day, I think that's when new money and new volume, in my opinion, is going to come into MU, because they're going to feel that they're able to get it at a deeper discount now, right? Essentially buying $150, $160 stock down at 120, right? So you're getting 25% on sale. So I think that's why, again, a lot of people may pile in there. The RSI will probably be around that 30 benchmark if we continue to sell off to that mark, which could indicate a bounce would be coming. MACD, of course, recently crossed to the downside after popping up here to these highs, so we can slightly continue to pull back, which is why, again, I think maybe the low 120s, but we should technically bounce from there. Let's check the weekly real quick. We can see the RSI was well above 70, a lot of hype going into these earnings, and then boom, they brought it down. But for the most part, we're still trending upward. But again, we're technically below this trend line currently. So that's why the sell-off can continue. Mid-Bollinger Band 115.42. If we give it another week or two, the Mid-Bollinger Band might climb up to about 120. And that might be a big key level on both the daily and the weekly. And that's why we could potentially see a sell-off to about the low 120 range. And then we can maybe see a big bounce. But RSI now sitting here on the weekly 66 3/4. So still a little high. MACD was flying high. So that's why I think the sell-off may potentially continue. But again, looking at the overall big picture, if you liked Micron and you saw it run up here to 160 and now you can get it on sale down in the 130s, if you stepped in and you bought this dip, understandable in my opinion. Understandable. And that's why if it drops another 7, 8, 10 points, again, we're never going to catch the low of the lows. We're never going to sell right at the highs. But if we can start piecing our way in on shares that are potentially fair or undervalued, then we should technically, in theory, find ourselves in a much better situation, several months, several years down the road. But that's pretty much it. Let's check the pivot points real quick. I'll let you go. We can see on the weekly next support level about 112.5. That would, in my opinion, be a little bit of an overreaction, but only time will tell. And we can see now we were kind of right near a resistance level of 135.95, and we can see we rejected. We kind of opened basically right at that level, had a little run up, and then rejected off of that resistance level, and of course the mid-Bollinger Band on the daily, right? So now we could potentially be coming down, and you can see, look at the next pivot point here, 122.35, which is why, again, I think at least testing the 50-day or potentially that low 120 fib level, pivot point level, Bollinger Band level, I think that might be supposedly kind of like the low of the low, unless markets, of course, really begin to sell off bigly. But that's pretty much it. I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, right? And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. Oh, what's this? There you go. Argus raised his price target from 140 to 170. This is what I mean. This is why they can beat it up in the short term all they want, but down the road in the long term, I'm pretty sure 9 out of 10 analysts, as we've seen, can see the writing on the wall, and they see the growth that could potentially really be incoming for MU over the next 12, 24 months. But yeah, like the video, subscribe to the channel. That's our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.